Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about how Sofi stock has gotten a downgrade and how various professionals and experts have different price targets on this company. So we'll be analyzing their latest news updates and their newest price targets from analysts. After that, we'll move right along and talk about how the Chief Technology Officer of Sofi Technologies has been selling some of his shares, while other insiders have actually been buying more shares. So we'll be discussing exactly why that is. Next up, we'll talk about Palantir Technologies regarding how one of their insiders has also sold around $187,000 worth of Palantir stock. And I'll tell you exactly why I think that insider is selling his shares. After that, we'll talk about how Peter Thiel's view on artificial intelligence will positively impact Palantir's overall share price over the long term. And if you're not familiar with Peter Thiel, he is a co-founder of Palantir Technologies, and he is one of the best investors in my personal opinion. Lastly, we're going to close out the video talking about a momentum stock named Aquestive Therapeutics, ticker symbol AQST, which is trading for only $2.50 or around there, but it could surge up to $12. So we'll be going over and analyzing this article. We'll talk about their latest news updates, price targets, and whether or not this company is a good buying opportunity right now. So for more videos just like this one on Sofi Technologies, Palantir Technologies, or Aquestive Therapeutics, go ahead and annihilate that like button. Go ahead, press it right now, obliterate it for me. Don't forget to also subscribe to the channel for more videos like this one, and if you want, go ahead and click that join button next to the subscribe button so you can become a member of this channel to support me personally so I can continuously make videos just like this for you. You can do this for as little as 99 cents, and it helps me so much and it keeps me here on YouTube. But with that being said, let's dive into today's stories. Sofi Technologies, if you didn't already know, is a fintech company or a financial technology company that essentially operates as a digital bank. And recently, the Sofi share price, ticker symbol SOFI, has fallen by around 10%. This is mainly due to a Wedbush analyst downgrading his overall price target and his performance rating for this company. Essentially, he has lowered his rating from a neutral rating, also known as a hold rating, down to an underperform rating, which is essentially a sell rating. Having cut his price target, this has caused other investors to sell their overall stock in Sofi Technologies, thus moving the share price downwards. The price target is very low, coming in at just $2.50, although the current share price trades for close to $5, meaning that there is a lot of downside according to this analyst. The reasons he cited for this downgrade in not only their price target but also their rating was a projected future decline in their overall free income, which could decrease significantly according to this professional. He also cited how the company's current net losses, if they were to continue over the foreseeable future, meaning that they may not become profitable by the end of the year. However, I personally would disagree with this analyst. Now, there is some good news here because another professional expert and analyst initiated coverage on Sofi Technologies stock, and that would be a Truist analyst who has a buy rating on this company and an $8 price target. I would more gravitate toward this buy rating and the $8 price target because I think Sofi Technologies is a fundamentally solid company, even though it's very risky, and I limit myself below a 5% allocation to all single risky growth companies for an initial allocation, which is why I only have a 4% portfolio weighting on this overall stock. This analyst cites, and I quote, "We see Sofi as the future of U.S. banking, digital, nimble, and always on," end quote. And that's a really good point, because some banks, especially brick and mortar banks who have physical locations, you can't always go into those banks, even though as compared to Sofi is essentially completely digital, very adaptable, and they are always open because their digital app is running 24/7. Other analysts that were surveyed, according to FacSet, say that this company is a buy. 53% of analysts, professionals, and experts which were surveyed say to buy this company, while 47% say to hold this company. Now, the Wedbush analyst wasn't surveyed, and he is the only one saying that this is going to underperform or that investors should sell, which has caused investors to liquidate their overall shares over short-term fear, uncertainty, and doubt, which is why SoFi stock has fallen by around 21%. The good news is that SoFi's management does have the ability to perform a reverse stock split if things get too bad, but I don't think that they should do that because that would draw unnecessary negative attention. But overall, SoFi Technologies fundamentally hasn't changed. Investors just who don't have golden hands or diamond hands aren't willing to hold this company for the long term, which is why I like to invest for the long term. I don't really care what the share price is over the next 5 to 10 years. My 4% allocation will stay until this company either goes out of business or until the company's share price surges. So I would love to hear your thoughts. And despite this, there is more negative news about SoFi Technologies, and that is pertaining to how the chief technology officer of SoFi Technologies recently sold a substantial portion of his overall stock, worth $1.1 million. He sold at a stock price of $5.47, meaning that he sold 66% of his overall holdings. And this is extremely negative when you see an insider sell, because that means the insider is anticipating that the share price over the short term will decrease. However, how does this compare with the CEO of SoFi Technologies, who also acts as the director, who is buying shares worth $5 million at a share price of $4.58 on average? So how do these compare? Well, here's what I think is happening right here. I think this insider, referring to the chief technology officer, has a short-term view of the company, and since he's seeing the share price drop, he did the best thing that he could do, meaning that over the short term, the share price is going downwards and he wanted to liquidate before the share price fell any lower. However, the CEO, on the other hand, has a much longer term time horizon and believes in this company's future, which is why he is buying instead of selling. So the CEO has a long-term outlook for this company, and the chief technology officer seems to have a shorter outlook for this overall company, which is why the chief technology officer has sold shares because he believes in the short term the share price will fall, while the CEO has bought shares at this new discounted price because he believes over the long term the share price will be substantially higher than it is currently. So it really just depends on what type of investing strategy you are using, which should determine whether or not you are going to buy or sell SoFi shares right now. Over the last year, we can see that insiders have bought around 2.37 million shares worth approximately $12 million, while insiders have only sold around 481,000 shares worth $3.2 million. So clearly, we are seeing a lot of insiders buying, which mainly just comes from the CEO compared to other insiders. But this overall is not good news, especially after a downgrade from one particular analyst on top of insider selling. But overall, we did have that other analyst who initiated coverage and gave SoFi stock an $8 price target while the CEO is also buying. So honestly, I would just say the news for SoFi is neutral right now, and I don't truly understand why people are selling their shares. It doesn't really make sense, because the positive and negative news should offset each other and you should just be kosher and neutral. However, we're going to have to see how this progresses in the future, so I will keep you updated. But it seems SoFi Technologies is not the only one experiencing insider selling. For instance, Palantir Technologies insiders have also sold around $187,935 worth of stock. And this insider would be one insider named Ryan D. Taylor, who sold 18,700 shares at a stock price of close to $10.05. However, I do want to say that this is not a substantial part of his position, unlike the SoFi insider which sold. This insider for Palantir Technologies only sold 18,700 shares, but he still owns around 210,260 shares, so this really isn't that much. I just think that maybe he needed to pay an expense, or he believes over the short term the company's share price could decrease, but who knows. There is a plethora of reasons why insiders sell, but there's really only one main reason why they buy, and that's because they believe the company will do well over the long term, which is good to see how SoFi's CEO is buying more shares. But let's dig a little deeper into Palantir Technologies, because they did have a very impressive earnings report. But I want to really hone in on Peter Thiel's view of Palantir's artificial intelligence platform. Palantir is a big data and analytics company that serves both commercial enterprises as well as government clients, and they are betting big on artificial intelligence, and they believe that it will pay off dramatically over the long term. The demand for AI and artificial intelligence and machine learning is exploding right now, and Palantir is taking advantage of this. Peter Thiel, who is a co-founder of Palantir Technologies, is one of the most vocal and visible advocates for artificial intelligence. That's something that Palantir needs for their long-term growth strategy. I also want to say that Peter Thiel is a very impressive and aggressive investor. Peter Thiel founded PayPal, and he was the former CEO, and he also was one of the first investors into Facebook, now known as Meta Platforms. These are very large cap companies that has made him millions, if not billions of dollars. And the fact that Peter Thiel has Palantir in his portfolio for a long-term artificial intelligence play is very good. Palantir also recently revealed their artificial intelligence platform, also known as Palantir AI, and this is set to serve both military, governmental, and commercial clients. The software is on track to be released at the end of this month, which is going to give investors a very good catalyst to trade off of toward the end of the month, meaning that the company could start to see the share price increase, and then after the catalyst, it will naturally pull back in their price. So you can play this both ways. You can trade off of the initial pre-catalyst momentum, and then after it, once the share price falls and you sell, you can buy it back for even cheaper. I also want to say that the CEO named Alex Karp and other executives who were on the Q1 earnings call stated that the demand for Palantir's artificial intelligence and their new AIP platform is like nothing they've ever seen in the past 20 years of working with Palantir. According to Palantir's COO, they had a large insurance company demo Palantir Technologies' new AIP artificial intelligence platform, and their chief data officer said that this was years ahead of anything he had ever seen. This is a huge compliment towards Palantir Technologies, and I really like how this is going to benefit the company positively over the long term. Palantir reported amazing Q1 results, beating on their earnings estimates and their overall sales. On top of that, it's currently forecasted that the company will be profitable on a GAAP basis, also known as a generally accepted accounting principles basis, through the remainder of 2023, which in and of itself is very positive. Right now, clearly the company is trading at a discount, but we did see that huge pop after their earnings report. I also want to make you aware how the CEO, Alex Karp, is very passionate and poised in regards to Palantir's major artificial intelligence opportunity. And he even said this, and I quote, "We are going to get hundreds of customers, and we will price it as we go. One of the things we have seen over and over again is when you're ahead of the market, you need to take territory," end quote. He is very excited about artificial intelligence and Palantir's integration of this technology in their existing platforms and their new AIP technology. The CEO says the strength of Palantir's artificial intelligence, as well as being backed by the co-founder of Peter Thiel, sets Palantir Technologies up as a great long-term buying opportunity. However, I do want to make you aware that Palantir is an extremely high-risk, high-reward stock. The only investors that should be investing into Palantir, in my opinion, are aggressive growth investors who are willing to hold the company for the next 5 to 10 years. This is going to be a slow burner, meaning that you're going to get value over the next few decades. And if you're trying to play the short term, then this company might not be for you. But if you are trying to trade off of the short-term momentum, make sure you're smart and you take profits when you are up. But overall, I would say Palantir has very exciting news and catalysts ahead of it, which means that this is a very positive news update for this overall company. Lastly, let's talk about a company that you all wanted me to report on more, which was Aquestive Therapeutics, ticker symbol AQST, which I personally do not hold. I currently have around a 3% allocation for Palantir Technologies, a 4% allocation to Sofi Technologies, and a 0% allocation to Aquestive Therapeutics, just because I believe it's a risky singular growth company, and I am not really a stock trader. I am a long-term risk-averse investor, even though AQST has been exploding lately in their overall share price. So if you are a stock trader or a momentum investor, then this could be a company you should look more into. Always make sure to do your own research. AQST is a therapeutics company that is involved in healthcare, and right now, the momentum of this company is phenomenal. Essentially, momentum investing revolves around the idea of following a stock's current trend, meaning that since the share price has gone up very dramatically, it's set to continuously go up until something very drastically goes wrong. Normally, investors want to buy low and sell high. With momentum investing, you actually want to buy high and sell even higher. but you don't want to get stuck holding the bag with these types of plays, making momentum investing very risky but extremely profitable. So let's take a closer look at Aquestive Therapeutics, ticker symbol AQST. The company currently holds a momentum style score of A, meaning that this is one of the best momentum plays to buy right now. According to Zacks Rank, they have a buy rating on this company, giving it a 2 rating, which is very strong. A number 1 rating is a strong buying opportunity, a 2 rating is a buying opportunity, a 3 rating is a hold opportunity, a 4 rating is a selling opportunity, and a 5 rating is a strong selling opportunity. So the fact that they have a rank of 2, meaning that they are a buy, indicates that this is a pretty good momentum stock, at least over the short term. Unlike Palantir Technologies, this company is specifically for stock traders as of right now. It currently just trades at around $2.50, but there are some estimates that believe this company could reach $12 by the end of the year or over the next 12 months. Shares of AQST are up around 52% over just the past week. The monthly price change of this company is up 117%, which compares very favorably to their overall industry, which has only increased by around 1.39%. The shares of Aquestive Therapeutics over the past quarter have surged by 229.73%. So if you have invested in the last week, month, or quarter, you are radically up on this overall trade. But remember to take profits either before or once you have doubled your money, because beyond then you are taking on unnecessary risk. I also want to point out how their overall 20-day trading average volume has increased. Right now they are averaging around 588,452 shares for the last 20 days, and this number is rising, which is generally very bullish, especially since people are buying more than they are selling. Lastly, there has been 3 earnings estimate revisions that are in the positive direction, meaning that AQST's consensus estimates for their earnings have increased from a loss of 78 cents to only a loss of 43 cents over the past 60 days. So when we combined their overall momentum rating of A, their buy rating from Zacks Rank, their overall volume increase and momentum of their share price on top of positive revision estimates for their earnings reports, these are very good catalysts for this company, and unless something detrimental happens, the company can continuously take market share. As of right now, the company is already up 12% just today, which is absolutely amazing. So if you all want more on this company, remember to go and comment down below because it is trading for very cheap right now. However, always make sure to do your research on all of these companies. Don't forget to become a member of this channel by clicking or tapping that join button next to the subscribe button so I can make more videos just like this for you. Obliterate the like button if you haven't already, subscribe if you are new, and I will see you in the next YT video.